Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for December 9th, 2018. So, my goodness, those bulls just don't want to stop. We had a little bit of a pullback yesterday. There was a little bit of a concern, I guess, that the bears might be stepping in for a little bit. And then those bulls came charging back, really running over the bears that happened to be in their path. Now, the diamonds closed 0.05% lower yesterday. But everything else, the SPY, new record high in the SPY, new record high in the Qs, new record high close in IWM. And this morning we're looking at a futures pushing higher. Currently the Dow futures are looking at better than a 40-point gain at the open, so a new record high print possible in the Dow futures for the open. We're seeing lots and lots of bullish activity here. No apparent desire to even rest as we keep moving on up here. Let's take a quick look at the VIX. The VIX started up yesterday and then quickly pulled back, but notice we're just down here, rubbing on the bottom of the ocean here. Sliding along. There seems to be no fear at all, no indication that the market wants to or even could have a desire to rest or even roll over in currently. So now that can happen very quickly. When we're down this low in the VIX, that can quickly spike. So you have to be prepared with a plan. And that's what I would say. Stay with the trend. Stay with the trend until we start seeing those clues. Because I have been in bull runs like this before where I was just sure that the market would roll over, that it must roll over because we're extended. And that put me on the sidelines. And standing from the sidelines, I watched the bulls just continue to push higher and higher and higher. Remember, the market can remain bullish much longer than you can stay solvent if you're trying to fight a trend like this. This is an extraordinary bull run, and they don't seem to want to stop. Even some of the analysts out there are starting to hang 30,000 Dow 30,000 targets out there on the market. So, the president came out slightly, just a second, just during the same day when we crossed over 25,000 and said, well, I guess the next target is 30,000. And now some analysts are even starting to sound the horn that that's where they think we're going to go. I really don't care to predict which way or what they think is going to happen. All I want to do is follow price action. And right now, there's no way you can look at this and not say price action isn't up. Does common sense come into play and say, it must necessarily rest or pull back? That comes into my mind, and I want to say yes. The market should rest or should pull back, but that doesn't mean it has to. If you need evidence of that, just go back and study the tech run up in the late 90s, 1990s, to see that common sense sometimes does not apply when the bulls are charging like this. Remember that money is likely pouring into mutual funds. It's likely pouring into 401k plans as folks, seeing this extraordinary market continue on. Now the fear of missing out is really coming into play, and they may be jumping on the bandwagon here at the end, but that's forcing those mutual funds and 401k plans to continue investing, driving more and more money to the market. And honestly, there's no way of knowing when it could stop. Just focus on price action. That is the only clue that we're going to have that it may come to an end. Now, keep in mind that reversals can be very swift and they can be really brutal. So make sure you have a plan to protect profits. One of the things I generally do is scale out. As I'm moving up, I'm reducing my risk to the market because I know a reversal could occur at any time. If you choose to stay in the entire position, which is fine, just make sure you have a plan, that you don't get complacent and lazy thinking this market will never roll over, because trust me, sometime it will, and it could be brutal when it does happen. So be careful with that. Make sure you have a plan in place to defend your profits and your capital, just in case it does occur. Let's take a look at T21.22. T21.22 is the 4-week new high, new low ratio. Notice that we are now pushing up here toward this bearish reversal zone. We've reached back up here toward this top. Doesn't mean that we have to fall. As a matter of fact, notice that we can go way beyond this first line that I've got here, and notice how consistent that can be. You know, when you're looking at that, we've even had periods where we stay up here for a while. So don't think that we can't go higher. Just know that we are approaching what would logically be a potential reversal zone. So watch that closely. Profits will be taken, and I'm not saying that we're just going to turn around and go fall from here and never come back up. It could just be a simple profit taking, a little rest, a consolidation, maybe all the market needs to settle down and prepare to drive higher. Remember, we have earnings season coming here, so as that earnings season comes along, anything is possible. Analysts are expecting earnings to come in as good, maybe even better than last year. So kind of keep an eye on that. That means stocks can continue to push higher. So we'll have to stay on our toes, just be prepared. On the economic calendar today, we have a Fed speaker at 10 a.m. We had the NFIB optimism number, which is extremely strong and staying strong early this morning. But this right here, we have a Fed speaker, and right after that we have the JOLTS report. This is the job tracking report. Right now, job tracking is showing an actual increase in jobs demand. They're expecting that this month, and with unemployment kind of pegged at 4.1%, which is considered to be full employment, it is actually showing some concern that business growth may be slowed down or stymied by the fact that there's not enough qualified workers. So that could be interesting. And then only a couple of bond auctions after that. So a really light day today on the calendar. I had 13 companies expected to report this morning, none of which I would expect to be, market moving type reports. But keep in mind, tomorrow we actually hit some reports for home builders, and those have been very, very strong. We'll want to watch those closely tomorrow. And then, of course, the banking earnings, the official kickoff on Friday here of earnings season when the banks start to report. So hang on to your seats. Bumpy roads could be ahead, but for sure, the bulls are still proving that they are in control, and they don't seem to want to relinquish that at the moment. Hey, I want to wish everyone a great day, and if this is the first time you've seen this information, do me a favor, click that subscribe button on YouTube, the follow me button on Facebook, click those thumbs up buttons, drop a comment, and feel free at any time to share this information with friends and family that you think might be interested. I believe preparation is far more important than relying on luck. So stay prepared, be prepared, and you're going to find yourself a much better trader as a result. Everyone, take care of yourself. Wish you great profits. I will talk to you all very soon, bright and early tomorrow morning.